Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, February 13, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We were looking for a turn. Remember or hearken back to last week. I was looking for a turn Wednesday, Thursday, so it extended a couple of days. We were looking for a turn. So here's the situation. Today, anybody on the other side of inside the numbers and live room trades got what we call in the trading parlance, schooled. We had what's called a bonanza. I was out in the open about it. Took a late Friday lottery ticket trade, bought put options with Friday expiration, meaning this coming Friday, the 16th expiration. We got paid handsomely today. We had traders in the room make so much money. The total profits were in the hundreds of thousands of dollars. They handed us a Whopper with cheese. Second trade. And this is what was said in the live room today before we wrapped it up for the morning session. I said it a couple of times. If they get to 491, 40, 50 area, I don't care if it's at the close, I'm buying it. That was the number that was on the board for live room members, 491.40, and that was the trade into the closing bell. And I'm not even calling this one a second lottery ticket. I'm calling this one a bona fide trade. Why is that? Again, explained it in the live room in detail, hinted at it last night. Some of you got it when I said, where are they expected to go or where is the bounce coming from? Let's do it simply. Market ran up to this spot, was summarily rejected. Even if it was for a day or so, it doesn't matter. It was a rejection. Therefore, when they go back up and get over that price, that is a bona fide breakout area. What the market did today was came back to run a test of the most recent breakout area. And by the way, first time, best time, which is why I said in the live room today, I don't care what time it is, I'm buying it. And then I said, if they give us a big bounce into the closing bell, I will take the profit, which I did. Today was an absolute bonanza. The profit reaped today was absolutely off the charts. Well done to all participants. Fantastic roll. Here's an example. This is what one of the traders sent me. I know it's just a snippet out of a phone or whatever it's from, and it doesn't give you detail, but this is what he sent me. He's very proud of it, and he should be. This is the profit today, before the afternoon trade. Here's another one. Just came in. How about Bob V? How about the calls I bought a half an hour ago are up 60%? How's your day going, Bob? Well done. The money is made on the turns. Now, we don't know whether this is going to be a prolonged correction, a one-day wonder, a week or two. It doesn't matter. I have my ideas, but it doesn't matter. They're hovering over the 20-period moving average. Incidentally, where did they go? They came right back towards what? You got it, home base. What have I been saying every day for the last few days? They're getting too far from home base. The put-call ratio, yesterday's tail candle. You have evidence. The sentiment, the talking heads on TV, they couldn't be more bullish. Notwithstanding today. Today, where the hell did the bulls go? We had vertical moves on charts in the semi-space and others. The quote-unquote, air quotes, AI space. This morning, we talked about it last night. What was the excuse? It was the CPI data shuffle. Hotter than expected. It's all bunk. The market was going to correct regardless. How about the list of stocks on the move? The amount of stocks that came up on the watch list day after day that were short opportunities. Some of them hit, some of them didn't. But just the fact that the short opportunities were flowing. There was a whole plethora, I love that word, of short opportunities, which told you that the market was getting too lofty. It was getting to one of those places where we're looking for a turn. Here's one of them. We entered a short yesterday. at the number. I mean, 3 cents, the market spiked it. We talked about it last night. I told you about it. And here's where the opening was today. First profit booked right out of the chute. Pretty much caught low of day for the profit target. How does that work? It works very well, thank you. Lazy swing trader, automagical algo system. There's others, but this is enough. It's enough of an example. What's going on inside the numbers? This was before the 8:30 a.m. data shuffle, so the numbers here really don't matter. 8:31, and there's the 8:30 data shuffle release, an excuse to kill the tape and get payment on the live room lotto ticket trade. We certainly did. Volatility equals opportunity. And check this out. Wait till you see this, but wait, there's more. I told you about the lottery ticket, told you about the end of the day trade. What about the in-between trade? We're interested in a zone for a bounce back in the other direction situation. 493.98 down to 492.95. Write that down, put it on a sticky note. How about a 10-point rip off that number at the opening bell? Low in that candle, 492.95. My number, 493.98. 10-point rip, $1 plus in the SPY. Nice trade right out of the gate. That was the lottery ticket cover. Go long. Some traders held some of the lottery ticket portion. Some took it all. Some took half off. All that stuff. All of the above. 493.98. Pretty self-explanatory from here. 10-point rip out of the gate or $1 plus in the SPY. Then they dipped again right into the zone. We had to play it again, Sam. Mind you, the old spike the low and rip it back up in the other direction trade. And they rallied again for another trade. Pause the video, read the notes, go back to the chart, and double check the work. Traders long from the zone have booked a nice stand-up double, 495.90's overhead resistance. We'll talk about that later. Let's talk about it now. What was the morning high? 495.85 against 495.90, and they fell back down. That was what? Overhead resistance. Sometimes they come up short, other times they spike them through. Pause the video, read the notes, go back to the chart to double check the work. By the way, 9:48 post. The spike the low and rip it back up in the other direction trade is available. 492.95, give or take, is the next spot lower. From a number perspective, spike the low, that was the next number. Traders will buy in between on a spike of the low, willing to buy the 492.95, all of the above. It's traders' choice as they understand how this works. We talk it through in the live room in real time. Pause the video. Read the notes. It's all in here. Everything you need to be successful each and every day. We're not going to win every trade. We're going to win a ton of trades. I just looked over in my email. I can't help myself. They're rolling in. Here's another one from Michael W. Thanks, David. Bought 491.40 down to 490.85. Another 12K plus holding trailer for tomorrow. Just one of the best days ever. Patience, discipline, and every trade a winner. 60 grand on the day. This is ridiculous. We had many traders like this today. It was absolutely a freaking bonanza. I can't tell you how this makes me feel when this happens to other traders as a result of my work and what I'm trying to teach them, and they're taking it and running with it. What's going on over in Camp IWM? Well, they were summarily taken out behind the woodshed, down 4% today. They never got to the 204.45, obviously, and they just crushed it today. They missed a number on the downside, which I find very interesting. We call it unfinished business. I'll have it for the live room members tomorrow. Think it's interesting because if they're down in the morning, they could be running to the unfinished business. The old spike the low and rip it back routine could provide another trade. By the way, this is what the morning trade in the live room in the IWM looked like. 194.85. We talked about it. A lot of traders took it. Got a tremendous bounce off that. Nice rip. Nice trade. See what I'm saying? We had absolutely something for everybody today. It was a bonanza. By the way, weekly chart, trend is your friend. Still above trend on the weekly chart. They're just eating time off the clock. Big down day. You look at this day, and all of a sudden they're hovering on the convergence of the 50 and 20 period moving average. Give that up, and you're changing daily trend. However, weekly chart, this is still in a chop shop, long-term consolidation back and forth situation. Doesn't mean you can't come lower. I'm just telling you what it is at face value today. Last week's low will be extremely important. That low is 190.06. If they give up that low on weekly close, that's another situation going on. Opens the door down to 185, 186. What about the folks down at the transportation department? Another woodshed experience. By the way, they too, in terms of the folks down at the transportation department, have some unfinished business below today's low. That could be bullish. They can go to get it tomorrow. We don't know. I'm just telling you what it is, which means there's some stuff unfinished below. Big volume day, reversal day. You have to heed this type of information. Look at the volume. Look at the candle. You're reversing the current trend or the recent trend. We talked about it last night, this being an on-time type of situation as well. Look at the volume in the S&P 500 or the SPY. Again, look at their volume on the downtick. It's a bona fide reversal. Even if they bounce for a couple of days, it's still a reversal. They could bounce for a couple of days, go sideways, put in some kind of a bearish wedge pattern, and then hit them again next week. That's absolutely possible. Or later in the week. Don't forget, this is, by the way, regular way options expiration week where weird stuff happens. Qs got hit along with everything else, down into the 20-period moving average, came back toward home base, near the vicinity of a breakup candle low, garden variety, the way the market works. Anything materially change on the weekly chart, really? No, they're just extended from home base. So coming back toward and even further toward home base is still in the cards. It's just nothing's changed as of today. It's a down day, that's for sure, but it's 1.5% in the Qs. 1.4% in the S&P, basically. It's not a catastrophic event. It's not a federal case. It's a down day. We've seen this before, but turns start somewhere. We take it at face value. This is what we have on the board today. Close below today's low, underneath the 20-period moving average in the Qs, and you have something else cooking on the downside. What's the next major thing on the downside under today's low? Well, you have a zone. You have more in the vicinity of the breakup candle low. They didn't really get too far into that today toward the bottom, but they got basically to the middle. But there's your zone. 423.30 down to 421, a spike of 421. That would be a bounce back in the other direction zone for the Q people. Personally, I like the lower number. 421, I'm all over it like stink on shit. And that's anytime soon, like in the next day or so. XLF, down day like everything else, 1.3%, spiked through the 20-period moving average and bounced off of it. Any shockers, any coincidences, anything strange here today? No, I don't think so. This is the way the market works. They were always going to make a turn. Big volume day, bona fide turn. Let's see if they can get below today's low, stay below the 20-period moving average. Where's the next place? $38. Write it down, put it on a sticky note. Why is that? That's the most recent breakout area. Sound familiar? Think back to the beginning of the video. We talked about the SPY. Same routine. What does that tell you? Right out of the course, lazy e-mini trader. All charts act and react the same way. I don't give a hoot whether we're looking at an hourly chart, daily, weekly, monthly. It doesn't make a difference. All charts act and react the same way. I prove it in the course. Smash mouth, nice bounce from today's low. Technically speaking, there's nothing wrong with this chart. Down 1.8% today. That's a nice down day, but there's nothing wrong with this chart. Can they come down more? Absolutely. Should they come down more? Absolutely. But who am I to say? Look how far extended they are from home base on the weekly chart. Yes, they should come down more. Will they have fits and starts, fake out operations, big rally days, big short squeezes, big suck them back into the long side, then pull the rug out situations? Absolutely. That goes across all markets. That will happen. It'll happen in the SMH, happen in the S&P, Qs, IWM, all of the above. And by the way, have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.